Good morning. Welcome to Forex in Four. Today is Wednesday, October 5th, 2011. All right, so we're starting with the Eurozone because where else would we start? But you can see here we're looking at a quick 5-minute chart, and we've got a little bit of action here. What looks like we may have just put in a double top here in the euro. I want to tell you about what's going on here. Yesterday, I'll just go back and show you on the, let's look at the 15-minute chart because that'll show all the action. But yesterday, we got this big move here yesterday with the euro going higher. Now, we know that the euro's been selling off for quite some time. The trend has been down. But Bernanke was speaking yesterday, and essentially he said that, he's willing to come back and ease monetary policy further if the economic situation should warrant it. So, a lot of people were concerned that, the politics of what's going on, it's going to make them hard to do it. And he basically brushed that aside and confirmed that indeed he would go ahead with further monetary policy. Well, that gave the markets a shot in the arm yesterday. Okay, you can see euro moved higher. I'm going to show you S&P 500. Okay, S&P shot up much higher. Okay, it had been selling off here. This is that's about 30 handles right there. That's a big move. Okay, you can see that oil's turned around. All right, these are all risk-taking elements going on that happen when they get the support of U.S. government. So there's S&P again. So what do we have with the currencies? Well, let's see what's happened in Europe since Bernanke's little talk yesterday. Well, a couple things have happened. One is that there's some sentiment now that perhaps these Euro leaders are going to get together, that they are really starting to see the urgency of the situation, and that they're going to come to the table and come up with some sort of plan. But you know what? We've been hearing that for a while, so I'm not buying it just yet. The other thing that happened is that the euro is actually shaken off a Moody's downgrade of Italy. All right, they took the Italy down 3 notches, that's pretty big. Usually they go like a notch at a time, maybe 2 if something bad happens. 3 notches is pretty big for Italy, and they're saying that they're they think they're going to have a hard time getting their debt under control in Italy, and they also said that there's probably going to be some more downgrades of other regions forthcoming. So while that's not a great sign for the Eurozone, I don't think anybody cares about Moody's and these rating agencies anymore. I mean, they've been pretty wrong in the past, and maybe they just reflect the current mood. And I guess if that's what you're paid to do, I mean, it's pretty easy to be a ratings agency these days, I guess. Sort of the economic data, we had PMI figures that came out for Eurozone, and they came in worse than expected. This is on the services side, PMI services. All right, so those came in lower than they were hoping for. That was pretty across the board. And then also retail sales figures in the Eurozone came in worse than expected, showing a decline of 1% versus an expected decline of 0.7%. So economic data is weakening. All right, we got this downgrade. All right, but yet the market moved up higher yesterday for the euro. And again, I think it was really had more to do with Bernanke saying that if these European guys aren't going to get their act together, he's going to come in and support the whole system by flooding the markets with cash. All right, providing that additional liquidity. And you know what? That's enough for people to say, okay, free money again. Maybe he's going to put the spigot back on. Let's get back in the stocks. Let's get back in the commodities. See what's happening. All right, so that's really what we've seen with the euro. Also to note is that Portugal got a vote of confidence here, and bond investors were allowed to take an early payout for some notes that they had out there, and they actually didn't go for it. They said, no, we're okay. We'll wait and see how this plays out. So that's actually a vote of confidence for Portugal. All right, we're going to see what happens here with the Euro leaders, and if they can come up with something here real soon. But we know about the Greek bailout. We know about that. But this double top I'm talking about right here actually looks like could be a little bit of a triple top. So maybe some resistance up here at say 133.80, which we'll see if we can get past that today. So, moving to the next order of business is the pound. All right, you can see that the action is similar in the pound than it was in the euro. All right, basically dollar weakness yesterday was the theme. All right, with Bernanke, but we pulled off a little bit. Now we're coming back up. Now we're pulling back just a little bit. They had a lot of government data came in. All right, GDP figures came in a little bit worse than expected. They were expecting a quarterly number 0.2%. They got 0.1%, which would push the year-over-year number to 0.7%. But it's actually at 0.6% now. So declines in GDP figures lower than expectations. Not by a lot, all right, but it does show that the UK economy is weakening. Now, tomorrow is going to be the rate decisions from both the ECB and the B of E, all right, and people are saying that the B of E may increase their bond purchase program known as quantitative easing. Or I guess that's what it is. It's quantitative easing. So we'll have to see what happens with the pound as well. But again, little double top action happening there for the pound. Some other stuff happening. Let's look at dollar yen here real quick. All right, dollar yen, just trading this range, 77, all right, 76.50. Very short-term trading in here, or it could be a lotto ticket for you if you want to get in from a longer-term perspective. All right, maybe you're buying it ahead of 76 even, and you're just holding on to it for long term and hoping that either A, global economy turns around, or B, you get some sort of Japanese intervention happening. All right, either of those situations would cause this pair to go higher. And you can see here it's not a ton of risk because it looks like 76 is a pretty good bottom for it. So you're talking about 65 pips here. If you can buy it down a little bit lower, anywhere in there, that could be a nice long-term play for somebody. So that's what's going on with dollar yen. Take a quick peek at the Aussie. Okay, Aussie's actually been moving down. This is the 4-hour chart, but if we look at it on the short term, all right, you can see same type of action. Here's the move yesterday with the Fed, with Bernanke, all right, and now we're actually moving just a little bit higher there. Okay, they had retail sales figures that came in the Australia. They came in better than expected. All right, 0.6% versus 0.2% gain. So that's a good sign there for Australia. And they also had their performance services index. While it came in a little bit lower, it was still a reasonable number. So what do we have this morning? Here in the U.S., we're going to get the ADP employment change. All right, they're expecting a gain of 70,000 jobs, and we're going to get the ISM non-manufacturing composite, which is just an economic reading, about 52.8. And the ADP number, it's not correlated to Friday's non-farm payrolls report, but people start to get a little bit antsy when they see it because there have been in the recent past there have been some similar numbers reported. So people start to mix that up with causation versus correlation. If the ADP number is good, maybe the non-farm payrolls number is going to be good and that kind of stuff. And you really shouldn't look at it like that. It's just another figure that shows private payrolls, how they're reacting, and we'll have to take each number individually. So that's really kind of what we're looking at here for today. Markets look like they're pulling back just a little bit here, but maybe we've got a little bit overextended after the big gains yesterday, and we'll see what happens. We got the Eurozone thing happening. Now they're talking about this potential trade war with China here in the U.S. on this currency bill. I got to say, I'm not totally adverse to the idea of this, putting out some sort of bill to put pressure on China. I think that the way this bill is drafted probably isn't a good thing as far as, inciting the trade war, causing potentially prices to go higher here in the U.S. as well as job losses to occur. All right, but something does have to be done about that. I think that it's a decent topic to talk about, but I don't think that should be the overwhelming mood in Congress right now. So anyway, that's really what we have today. Let's see if markets can continue that rally off of yesterday, or if there's going to be something that pops out to derail it. I'm not certain the ADP number is going to be big enough to do that, but we'll have to see how that plays out. So that's what I've got for today, folks. Good trading to all.